Hi, this is Jack from Alpha Charts with a State of the Market video. Today is June 28th, 2020, Sunday. Before we get started, this video is for educational purposes only. These are not recommendations to buy, sell, or hold any stock or security. And I may hold positions in some of the equities mentioned. Know your time frame and risk tolerance. Also, if you enjoy these videos, please like and subscribe to the channel. Okay, so we're going to start with the SPX like we normally do. And it was definitely a down week. We'll call that a distribution week, right? Nice big red bar right there. But let's see, putting some Fibonacci's on the current move, which is from the low to the most recent high. This is a 0.786 retracement, right? And if there's continued weakness, where else can it go? So this 0.618 retracement makes a lot of sense to me, or someplace in this general area. So what's happening in this area? We have the average volume weighted average price from the peak and from the low, which are these two red lines. We have the fib retracement right here at 2836. I would even say 2870 would be a valid area too, someplace in here. Also, if we just scroll out a little bit, you'll see this big green area has been an area of importance in the past. Resistance, we'll even call that some resistance, and finally breaks through that area. So it's been, this green shade area has been very important. We're now kind of seeing the act for support, but I believe support can be anywhere within it. So let's just take a look here, and from where price is going down to the volume, it's another 5 to 5.5% or so, right? Roughly. So roughly 5% more down. But if that 5% comes down, happens the way this does from here, that would feel like the end of the world. Coming into this area, that's where I'd look to see if there was any support showing or not. So that's kind of what I'm seeing for the SPX. Again, this is the more important. Area is important, but I'm not gonna place my bets on this area holding. I think this is a much more important area. Now, if we fail over here, well then there's a lot of different areas down here. There's a 50% retracement right here that could be important. 0.382 right there. That looks like in the past it's been kind of important. Then potentially all the way back down here, but we're not there yet. I think that that this area is the next one that we should be focusing on, and really, I would even start at the 2870 level. Right, that's that's where these are kind of heading towards. So which would still be in the green area. Okay, moving on to Qs. Going over this big channel just for reference. Every time prices come close to this channel, we've got a pullback. We have it again here. Going back to the daily. And we are going to take a closer look at what's going on. So we have a pullback. Now, this is above the 23-day EMA. Just looking at the SPX, you see that SPX is already below the 23-day EMA. So it just shows you that there's a lot more strength in the Qs, right? This was the prior highs. And so this area is the retracement that I am interested in. Again, we're not even close to that 0.236. And looking where we're at here. Come on. There it is. And that's another about 4% from where we're at. So again, it is definitely the strength. Lots of distribution happening in clusters here, which is not pretty. But this is the area, we'll call that 231-ish, that I think really needs to hold in order for the bull trend to continue. Because if that holds, then what do? We ran up, and then we're going to be consolidating sideways, marking time, and running through all the oversold overbought conditions and any momentum divergences, we're basically gonna wipe those out. So that is the bullish scenario. If we break, the 230, that would be more of a bearish scenario, and obviously a much deeper retrace would be in the cards. But I think that right now, 230, 231 is the area that we're watching to hold, right? To remain in a bullish scenario. So the small caps are by far the weakest of the bunch, and they've been forever, and they remain. You'll see peaked out here, coming down below the 23-day EMA, which is curling down. So where can it stop? This area right here. We have the volume weighted average price from, again, the peak and the low, and they're all coming together in this, 127.50 to 131 area. And so also this was support in the past. Support right here in the past, and also some resistance. So this area is important. So I think that as long as 127, we'll call it 125 even. As long as 125 holds true in IWM, we're still in a bullish scenario. Again, you hate to see this cluster of distribution here, but it is what it is, and the levels are clear. So this is what I'm looking at. But again, this 23-day EMA is already turning over. QQQ, it's called flattening, and SPX, it's starting to turn over. So that's that is the indexes. Looking at the semiconductors, still above the 23-day EMA. This was the high. It did try to break out. This could be a false breakout, which means that'd be a very bearish scenario if this was a false breakout. So what are we watching for? Again, looking at Fibonacci's, we're below the prior high, so that's a big negative. Where can it go? I think the 0.786, which is about 142, that's an area that makes sense coming across. If we break 142, though, then that's a much deeper correction. And again, semis have bigger implications than just for the technology sector. I think it's a broader pullback for the whole economy as a whole. And looking back, again, there's multiple levels throughout here. I mean, could we retest the bottom? That's always a possibility, but we're not there yet. We're here. We're at 142. That's the level I'm watching to hold. And that would be the bullish scenario. A sideways move, consolidation, maybe some kind of pullback and have an inverse head and shoulders, right? Even if it does break that, that would be very bullish. But that's kind of what I'm watching for. Again, SMH, false breakout potential right here. 142 needs to hold. Looking at the financials now, so volume weighted average price, top and bottom, and we are already below from the peak, and we are testing the trough, which happens to be also right where this uptrend is. 23-day EMA is curling over. Lots of distribution in the books. Nobody's buying right now. So where can we go to, right? If this breaks, this trend line breaks, which it very easily could. I mean, momentum is definitely to the downside. This $20 is very important. We'll call it 20 and a quarter or so. Because, again, looking back, this was resistance, and then it broke through. So this has the chance, again, with support here too, this has a chance to remain support, and this would be maybe a great place to manage risk against, potentially. We'll find out, but here, if it comes back down to here, we get a bounce, and then we're going to have a head and shoulders in here. Maybe. I mean, I don't know if I'm going to be shorting the financials just based on a chart pattern by itself. I always like to see a little bit more with that. Like, I would need a firm break of $20. Then I can manage risk. But for now, financials, testing the trend line, testing the volume weighted average price from the bottom, 20 and a quarter ish is the area that right now seems to be the most important area to hold. Looking at lumber, and there's the same trend line that I was using in the financials, and lumber already broke it, but it is holding above this area, which lended as support in the past. And I'll just go to weekly just to clean things up a little bit and take off the volume bars. Perfect. All right. So this is the area that has been resistance, really broke through it. And then it was support, and now we're going up. Is this a big bear flag? Well, maybe, it's possible. But I'm seeing as, first off, if 52.50 breaks, price gets below it, I think there's a good chance that you are coming down into this range in lumber, which would be, again, a big negative for the economy. Now, this is, $39 or so is the area that is the absolute must hold, right? If $39 breaks, we're in much bigger trouble. But again, we're not there yet. We're at this area, and we're at 52.50 has to hold, right? 52.65 has to hold. We'll see. But right now, wood looks like it's starting to roll over, and it's on the make or break area. All right, so look at the put-call ratio. Now, this is the equity-only put-call ratio, and we use equity only because there may be a lot of people that are hedging their portfolios but are still long, where equity only gives you a better feel, in my opinion, of what the market is actually doing. And so what is it actually doing? Well, back on June 8th, we were tipping the scales way over our skis in the bullish camp. And then we had some big, nice pullbacks and some chop going on here. And we're at 0.885, which is nice. It's a pullback, but it's not any extreme by no means. It's, so could we get another couple of days of choppy pullback, or even, I shouldn't say choppy pullback, sharp pullback to cause the put call ratio to get above this? I think 1.4 level is the important level. Yeah, it's very, very possible. I think that's actually the more likely scenario, is over the next week or two, you're getting that, 4, 5, 6% pullback, kind of like what we talked in the SPX, right? This pullback maybe to this range right here, looking at, 5.5%. But if it happens quickly, it'll feel like the end of the world. Everyone jumps into this bear saying, oh, here comes that retest that we've been talking about since March, and maybe it doesn't happen, right? We'll see how this shakes out. But I think this, watching the put call ratio, again, I like the equity only. It gives me a truer sense of what's going on. Seeing how close we can get to this 1.4 or beat it, that will tell us a lot of information. SPX TLT, as you would expect, TLT is, doing very well in relative to the SPX. Looking on a weekly time frame, it'll give a better sense of what's going on. Resistance, size 2 came back. Is this support now? Maybe. If we get a bounce here, that would be very interesting. Even if the market doesn't turn around, it just means that the market's doing better than the TLT. Well, I should say the SPX is doing better than TLT. Well, that would be amazing. That'd be huge information. We break below this area, and there'd be a lot more down probably coming. So I think this SPX TLT chart is super important. Let's go back to the daily. And this area right here, this green area, I think needs to hold. Again, if we get a bounce up from here and start taking out some of these highs, most recent highs, I think that would be, especially ahead of the markets really turning around, that would be very, very constructive. Let's look at credit spreads. Now, in credit spreads, we're seeing a widening of the spread here. Higher low, right? Potentially, we're seeing some lower highs also. So it's not totally conclusive, but definitely in the short term, a widening of spreads. So again, that goes with the whole bearish theme that we've been saying. That all makes sense. So now we're watching to see if this 1.7-ish area gets taken out, 1.71 gets taken out. If it does, that's a much more bearish scenario. If this reverses back validation, that'd be the bullish scenario. So credit spreads right now, widening, bearish scenario. Looking at the VIX. Now the VIX is really interesting because we had a big spike in volatility, as far as big down days, I should say, but the volatility index hasn't really shown that all that much. We're not seeing these big jumps in volatility like over here. We're seeing subdued volatility. I mean, look at it on the weekly. On the weekly, we still keep going down, right? So we're getting these huge down days, a lot of distribution looking like it's coming in the market, yet the VIX isn't really responding to it, right? So this tells me that maybe it's not going to be the end of the world, right? I mean, going back to the put-call ratio, right? And you'll see, I like to here's the weekly, right? When it's up here, the market is never going up again, right? That's the sentiment. Market's never going up again, it's going to zero. Over here, the market is never going down, right? We're going to the moon. And so, on the weekly, we got pretty extended. If we can get back up here with the VIX, kind of chilling out and not doing too much in this range, that's a very bullish scenario, right? And the SPX maybe, losing 5% more, 6% more, somewhere in that range. There may be a bottom shows up there. Maybe not. We'll see. Value line geometric index, as expected, it did go down. So right now it's kind of marking time between these two ranges. Not much going on here. This is kind of expected. That's weekly. Even on the daily, hit this area, came back down. The 390, 385-ish area, that's the part that needs to hold. We'll see what happens at that point. If we get below 380-ish, I think that's a bigger problem. But again, nowhere near there right now. So looking back at, the cues, right now, maybe it's a topping pattern, maybe some kind of head and shoulders top is being formed now. I don't know. SPX. This one didn't even make it back to new highs, but it is making lower lows. Maybe this area holds. Maybe it's some kind of A, B, C pattern, and the 0.618, which has all this areas of potential support ready for it, right? We have areas ready for it. I would love to see 2870-ish hold here and not even make it back to the 0.618. That would be very bullish. So that's what I got. I will be making another video actually in a few minutes about my experiment. Week 4 is done. So I have some numbers from the first month, which are pretty exciting. And so look for that video too. Again, if you like this type of content, go ahead and like and subscribe to my channel. I appreciate that. It helps me keep motivated to keep making these, knowing that I'm helping and interacting with people. And that's why I do this. And again, hope you all have a great week. Stay safe out there. I know all the COVID stuff is starting to rear up again. I'm in Florida, and it's it's starting to get a little bit more concerning. And we'll see how the market digests all that information. Take care and have a great day.